Hey everybody, this is Donnie Mojo. I was going to do a quick video. This is going to be totally unstructured, just a recap of today, but also just I want to go over like some. I've had people ask me a lot here lately how I trade and all that. So um, first thing I'm going to do is clear my chart. I've just got one indicator, the Trend Magic on here. I'm going to add just the line in the sand, which is like the standalone line in the sand. The Mojo pivots, have the line in the sand. That's kind of the core of the Mojo pivots, and where the statistics and all that come from. But I just want to I'm going to zoom way out so you can kind of see. I'll blow this chart up. I think I will. Here we go. Now I just want you to see what happens with the line in the sand. So every day, this is set on a daily. It should be. Yep, on a daily time frame. I just want you to see what happens with it. So you know, price goes down, gets far enough away from it, and comes back to it. Kind of like a moving average, right? It only can go so far before it has to revert back to the mean. Well, this in this case, we're not reverting back to a moving average. We're reverting back to the line in the sand. So it goes away from it, comes back, goes away from it, comes back. So my logic is, you can also notice that, you know, we get up here, things start, we had a downtrend going here. They came in, put in a higher low here, and then they always do this. They don't turn it on a dime usually. They make the higher low here, and you can tell, if it makes this higher low, this is the market structure part of trading. They kind of goof around with it, and look where it's goofing around. It's oscillating around the line in the sand. So there's you could put a box around this and trade the ups and downs, or you can just leave this alone if it's oscillating like that. Um, but I just want you to understand, just to see that visually, what happens. They're working on turning this market, oscillating around the daily line in the sand for that day. That's September 26th of 2025. So it's just oscillating, and then they finally take it, right? They finally take it there, and then this is a really strong move. Never does come back to that daily line in the sand, but look, we got another line in the sand the next day. So it started the next day, the next trading day, which is the evening of the previous day on futures. So then we got this action where we're kind of trying to get up above it. They started this uptrend, right? Well, they're trying to get up above it, failing, failing, failing. So you can take shorts off of this if it's failing that much. You notice that it's failing, you take shorts off of that. And so my logic is, this is kind of a general rule that I stick to, is that if we're below the line in the sand, I'm bear biased. I'm bearish on that. If I'm above the line in the sand, I'm bullish. So up here, I'm bullish. If I open this day up and we're above the line in the sand, I'm looking for an excuse to get long. Unless I'm way extended up here, then I'm looking for a way to fade this extension back to the line in the sand or somewhere close to it. So that's so they made this big push up, made a higher low, and then they're trying to make a higher high, right? That would be the next logical move, would be to make if they're gonna keep the uptrend intact, is to make a higher high. So the next day they're bumping their head against this line in the sand. And you look, it gets far enough away from it that it just reverts back to it. It's far enough away from it, reverts back to it. Goes above it and goes far enough away from it, and they bring it back to the line in the sand. Same, so that's the end of that day. The next day, they bring it to the line in the sand. They bring it below. So I'm bearish in this moment right here when they're bringing this down below the line in the sand. I'm looking for an excuse to get short. And then they bring it far enough below the line in the sand that they bring it back to it. Look where it bounces, guys. I mean, look where it bounces. It gets far enough below it, bring it back to the line in the sand. Look at the rejection right there. So it doesn't mean it's going to reject and go 100,000 points to the next the next move down. It just means you're at least going to stall there, So if I'm fading this and I want to get back to the line in the sand on a long position, I'm at least doing something. I'm trimming and trailing, or I'm at least moving my stop up. I'm doing something. I'm becoming aware of what's happening when we get back to the line in the sand. So because as you can see, it rejected there, and then they goof around with it. It kind of oscillates. If I had, this is a 15-minute time frame. If I had this on like a 1-minute time frame, you would see these big oscillations around this line in the sand for that time period. So then what happens? They break the line, get above the line in the sand, and they take it. So that's kind of starting place. So taking it a step further, we can hide this, zoom back out, and we'll show. It probably won't go that far. We'll bring in the Mojo pivots. So there's your line in the sand, and so all these are standard deviations away from the line in the sand. So it creates almost like this oscillator effect with price on the chart. So like if I had bear with me, I'm trying to keep this as fast as possible, but so if I had like a stochastic on here, so you see how we have this, we have the 50 line there, then we have a standard deviation, kind of a standard deviation look above and below the midline. So you see like it gets extended above it and comes back to it, extended above it, comes back to the midline. That's what we're doing here with the line in the sand and the Mojo pivots. Except, let me get rid of that. Except we're applying statistics to it as well. So what I want to know, okay, so when they bring this away from the line in the sand, how far does it go? And does at the end of that whatever time frame you got the Mojo pivot set out, you can look. We got all these time frames you can set the Mojo pivots. I've got it set to 1 day. That's just what I usually stick with, or 2 hour if I really want to be fast. But 1 day is good for me, unless I'm looking like big picture and I'm looking at a daily chart, which is not very often. I'll usually switch it over to a weekly chart so it doesn't look so funky. You'll know if you mess around with the Mojo pivots, you'll know what I'm talking about. So just imagine that oscillator that you've got on your screen, but we're using price as the instead of a stochastic line, we're using price as that oscillator or that indicator. So all right, take a breath here. Let's see. So what we're trying to do is we're trying to see when they take this on down, how far does it go, and does it stay there when they take it down? So that's what these statistics are for. So you have 200 on this particular 15-minute chart. On a 5-minute chart, you're not going to have as many days because it won't go back as far. The historical data is not that far. So on a 15-minute chart, though, I have 246 days that it's analyzed, collected data. So out of those 246 days, 88% of the time, 88.2 to be exact, price closed at the end of the day, which is the end of this segment of the Mojo pivot right here in this area right here. 88.2% of the time, price closed within this area right here. These two, the MR1, the MR1 and the MS1 right there. 88% of the time, price closed at the end of the day within that section. So let's go a little bit further out, bigger area. 97% of the time, which makes sense, right? That's a bigger area. It gives more probability that price will kind of stick in between there. So 97% of the time, at the end of the day, price closed within these two areas right here on the daily time frame. And then on, let's go even further. So the MS3 and the MR3, 99% of the time, so only 0.8% of the time does price on this particular chart, on this particular ticker, the NASDAQ NQ, 99.2% of the time, price closes within these two areas by the end of that period. So that brings you to a situation where we can apply, even more granular statistics here on this side, and kind of get even more exact with what we're doing here. So let's just go to today's price action, and I'm going to switch to, instead of Heikin Ash, I'm going to switch to regular candles here. Doesn't, the statistics are still going to calculate, but they're going to be a little different because I'm using candles and the Mojo pivots are a little different. But it doesn't matter what time frame you're on. Find the statistics that suit what you're trying to do, which if you're trying to fade into the line in the sand or fade away from it, um, you know, just find some settings that give you the statistics that agree with what you're trying to do. So, um, so what we had today, I'm gonna zoom this back out, or yeah, zoom out, and you can see the. So I've got the Mojo pivots on a daily time frame, and these are slightly different from the 5 minute. Let me clean this chart up. Let me get rid of all this stuff. This is just stuff these are just extras. Okay, we just got the Mojo pivots. Am I still recording? Yes. Okay, so this is what I traded today. Um, where's that? Okay, this is my total for my Bullinox account. 16,000. Uh, that's trading. Uh, that's trading. Let's see. You can see there's the Bullinox. It's a funded account. There's $133,852 in there. Sorry, 605. The net liquidation. There's commissions calculated into this part. This was a 50K account, so there's $83,000 in profit there on this Bullinox account. So what did I do today? Well, what I did, this will be a good segue into the next part of what we want to do. So, excuse me, let me get a drink. It's starting to get hoarse. So we open, here's the open. You see the gray area. Here's the open. We went down. Look where we bounced. Not only did we bounce off of the MR1 on the 5 minute. Oh, the reason these are different is because there's 152 days calculated here and 220 calculated here. So these are going to be slightly different. But like I said, the statistics are what matter here. Learn to follow and trust the statistics. So we opened up, we went down. I'm looking at the 5 minute here. I got my eyes on this area right here on the 5 minute. And so we went down and we bounced right off of the MR1. I look over here at my 15-minute chart. I've got my eyes right here. We went down, look where we bounced right here, the line in the sand. Isn't that crazy? So I can't remember if I took this long or not. I think I did. Yes, I did. I took this long somewhere, and I'll tell you where I probably took it. I'll have to look exactly, but um, my software was messing up a little bit, so I probably got a late entry. But anyway, so that brings us into price action. So we've talked about market structure, higher highs, higher lows for an uptrend, lower lows and lower highs for a downtrend. Right here, lower lows, lower highs, lower lows, lower highs, lower lows. That's for a downtrend. If you don't have that in place, you don't have an uptrend. I'm sorry, you don't. Um, so what we're looking at here, okay, so they've extended this up. Remember the oscillator effect? They've extended this up into what we would call an overbought situation because we're up in this in the Mojo pivots with statistics backing what we're doing, and so we're overbought. So if I take this long here, which off of the 15 minute, that's a long off of the line in the sand, which is a good a good long. So we're still in an uptrend. We're still making higher highs and higher lows. We made a lower low compared to this, but in the long term, in the grand scheme of things, if this was a longer term time frame, you would just see a higher high and a higher low. Um, so price action. If I were to take this long, where would I get in? Well, typically I'm going to look. We'll just look at the regular candles, and we'll look at the Heikin Ashi candles. What I like to see is you see how right here in this area right here, you see this down. You have this red candle here, so which would be a pullback candle in an uptrend. I like to see the next, or whatever candle I'm going to enter on. I like to see it break the previous candle, which is be this red candle. If I'm going to get in long anywhere on a pullback, I want to see it break this candle, and I want to get in at the break of that candle. So right there would have been in on the long, and I'm looking. You see how the candles never breach the lows of each other, the lows of the previous candle until right here. And look what happened. It pulled back. When it broke that low, it pulled back. So when I'm looking to get long, let's say, right here, I'm noticing a bounce here, and we're still going down. Look how the candles, the bearish candles, or this bearish move down. Look how it never breaches. So if I were to get in short here, I'd probably be in short right here. See this up candle, and then we had the break of the so we were on this down candle. We had the break of the previous low, and then look what happened. It never breached the high. Then each successive candle never breached the high. Let me pause real quick. I got a phone call. Okay, I'm back. So same thing. Never breached until right there, and look what happened. It breached right there. Never breached this candle. Never breached this low, and it just kept going. So if I were to get long, where would I get long? I would either get long when I notice the bounce here. I'd either get long here, right there, and I'd probably take some heat. And then I would for sure be long right here when it broke this candle. So I may even take a stop here, a small stop, like $500, right there at the breach of that. I may just have a $500 stop, and you'll see, like I do that pretty often. See it, so like $500 stop, and let me just put this on sim. So I got a short candle there. Let's just go short.
Order filled.
So I've got a $500 stop, and I've got a $10,000 target.
Filled.
So I got a stop. And so what may happen is like I may take the break of that candle right here. Let me bar this down, and I may take a $500 stop right there. Figure out what works for you. The $500 is what I'm willing to, depends on the day, but $500, I'll take this long. If it comes back against me for $500, I just take the stop, and then I'll just watch and see what happens with the price action. I'm looking at the candles. I know that it breached right here, and so what's going to happen? I'm looking at what's going to happen. So this ended up closing down, and then we never got a break of that candle. So I know something's going on now. I know something. I know they're trying to turn this thing, and so they never breached the low. It would have to breach the low to keep going down naturally, but we got a clue right here. It breached the high and then breached the low. Then the next candle never breached the low. So then they closed this. They tried to breach the high right there and closed it right there. So I'm looking at this candle now. None of this exists right now. I'm looking at this candle right here, and then it opens right here, breaches right here. I'm long. And and I've got a $500 stop, so tight stop. This never would have, most 99% sure this would have never, it probably opened here and just shot up. And so with a $500 stop, let's see how many points this is. 988 to 988. So it's at least 100 points. So 100 points would be right there. So I'm risking, I don't know, 140. I'm risking, let's see, $500 divided by 140 is 3.5 points, basically. 3.5. So I'm risking 3.5 points right here to make 100 points. And I'm not saying I'm going to get all of the 100 points. I'm just saying right here, I took the breach of that high of that candle, and you just study this, study the price action, and so you can kind of get a feel, get some screen time around what you're doing, and get a feel for what's going on. So um, I'm saying I would have been long here. No breach of the previous candle high, low. No breach of the previous candle low here. No breach of the previous candle low here. No breach right here. No breach, no breach, no breach, no breach. Bam, right there. I'm out. You see that? That's how I trail. Um, all right. So then if we take that long, we cashed out on it. I don't have to take any other trades, but unless I want to. But look where we are right now. In this area, none of this exists, right? None of this has happened yet. We're still trading right here in this moment, and we're way up here. And look at the statistics for what's going on up here. If we get up here, look at these statistics. So I know on this 5-minute set of Mojo pivots on the daily time frame, I know if we're sitting up here above MR2, then let's look at the statistics. MR2, it touched over 154 days. We touched MR2, meaning we touched it and then went above it, touched it and went above it 84 times, 54% of the time. So over half of the time does it go up there. How many times does it close above it? That's a huge difference. 80 out of those 84 times that it went up there, touched it and went above it, only 24 of those times did it close. So did it close above there at the end of the period? Does that make sense? So only 24 out of the 84 times did it actually close in this area at the end of the day. So what am I doing? I took this long up here. If you're thinking of doing anything else but going short, you're stupid. So I'm looking for a reason to get short in this area right here. So let's look at the price action. So price action, we went up. This is the candle we would have gotten out on. And then we went short right there. And then we went short right there. They're trying to turn this. You can see it's making a lower high right there. Then they made a lower low right here. So there's your market structure confirmation. Made a lower low right there. So then we got these candles right here. Let me zoom in. So I'm looking for a breach. I'm looking for a breach of this area. And it just so happens that I didn't take any of these right here. And then let's see. Let me see what's going on. See, I'm looking at the 15-minute too. So I got in, guys, I got in at like 110 or something up here. I posted the screenshot of it in my Discord. But so all I'm doing is looking at the price action. So right here on this candle, and then finally right here on this candle right here failed to breach the high of the previous candle, but then breached the low. So I missed this. I missed the entry right here, but then it opened right here. This candle ended up going down and then closing up right here. So I got in like on this candle right here, somewhere right in here. So it closed up, and so I knew that we breached the low right here. So I'm thinking, okay, we've got a valid short entry right here. I missed it down here because I wasn't looking or something was going on, and this candle ended up closing up. I said I'm going short right here. I'm going short because it already breached right here. I'm going short. It was like 110 when this pulled back up here. I went short. Let me see if I can find it. I'll put it on the I'll put it on the video so it like so you can see it. Let me find it on the Discord. 1 second. Right there. There it is. Ah, here's the Discord. Here's the post. And right there, see that? There's my short right there. I got in at 111 to 125 111 25. That's like almost the very top. Like right there's where I got short. And it's only because I was looking at the price action. I knew the statistics were telling me we're going down, looking at the price action, and I just so happened to look at my screen when this had happened, and I got in right here, right in this area, like right there. So then, once I got short, I'm looking for price action to confirm what's going on. And this is regular candles. I typically, have the Heiken Ashes on. Let's just go ahead and put the Heiken Ashes because you understand the concept of the price action, what I'm looking for. The Heiken Ashes kind of make it a little easier to kind of differentiate what's going on. So here's the candle that I got in on right here. Posted it at 950. So like in between this area right here, 950 and 10 o'clock, I got in right here, like right there at the almost the very freaking top. It was only because I knew that we had breached the previous low of the previous candle and we had pulled back. That's a beautiful opportunity just to try it because you can put your stop up here real tight. And if you're wrong, if it breaches the high there, you're wrong and you just take your stop and move on. Yeah, but it's worth the risk there. Your risk reward is huge. Look at this. Um, so right here, I'm looking at, so I'm short, right? I'm short, and you can see my crosshairs are lined up. If I move, like it changes on each chart. You can see, the time. My crosshairs changes with each, with both charts. So let's look at this. I took the breach here, and then we got a breach there, breach of the low right here. And no breach of the previous high here, no breach of the previous high here, no breach of the previous high here, no breach of the previous high here. So the next 15-minute candle, look what happened. I'm probably, in fact, I did. And it was I don't know, it was a weird day. There were some software issues I had to deal with, but um, look at the, if you're short up here, look at your target. Bam, right there. Look at the line in the sand. Remember that logic I said where we extend away from it, the oscillator gets overbought, which in this case is our mojo pivots. We get overbought and then we go back to the line in the sand. So basically we faded the overbought condition and used price action to make it happen. Um, so then we get to the line in the sand and we bounce, right? And we get up here, and then we have no breach of the next candle low, so we failed to breach. We failed to continue to make lower lows with this candle here. So I at least need to be doing something here with my position, managing it according to what's happening with the price action. So then this candle becomes a doji candle and then breaches the high, so I got to be real careful here. And then what happens with the next candle? Naturally, if it breached the high here, it needs to keep going, right? It needs to keep breach this high here, keep going. It doesn't. It fails to do either one. So then we've got an opportunity right here to say anything could happen right here since we failed to continue to make higher highs. We failed to do anything, so we've got an opportunity to do something. So let's see what happens. It breaches the low of this candle right here. On this candle right here, it breaches this low. And then look what happens. It never breaches the high of the previous candle till right here. And look where it bounced. Look, I mean, these are targets. When you get short somewhere, your next target is your next mojo pivot. And you just need to know though, if you're gonna be short here, you're gonna be short here. Your target's gonna be here. You know, the further you get extended away from that, and you can still target these, but you need to be trailing it properly. You need to be trailing it according to what the statistics are saying. So if it gets down here to MS2, I know uh, we touched it 9.5% of the time, and we only closed below it 2% of the time. So I know that somewhere in between here, we're probably going to get at least a rejection of some kind, maybe even a reversion back to the line in the sand. I hope I'm making sense with all this, but I haven't even gotten into the Sigma 9 stuff, but that's uh, that's the mojo pivots. That's the anomaly of the line in the sand, and that's also the the price action. Just a kind of a overview of those three items put together, and then you can add whatever you want to. Moving average. You saw I got all kind of stuff on my charts. The trend magic is a good one. Uh, UT bots if you really want to, and I would filter these UT bots for when price gets overbought into these mojo pivots. A sell opportunity there would be great. And in fact, it was. Like let's switch back to candles, which is this is the way I had candles here and I had Heiken Ashes here. So um, we got up here, and I didn't take this sell signal. It would have been a great one because we're so extended and the statistics support a short so much that this sell right here was a good one. I took the price action short. So anyway, we can talk about all that on another video, but you can add whatever you want, whatever you're used to looking for. But I want you to understand the logic behind these tools that I have, and I'm not holding anything back on you guys. This is the tools that I use. It really is. And I just had enough screen time and enough time looking at the price action and getting a feel for the ebbs and flows of the market that it works for me. So I hope that helps. There's no magic in what I'm doing. I just have probably more screen time with these tools than you do, which is why you're asking me questions on how I use it. So anyway, I hope that helps, and we can talk about whatever we need to later on in another video. But this one's getting kind of long, so I'm gonna shut it down, and I'll see you guys on the next one.